Hi, everyone. This is Sean. Wanted to touch on my dividend producing assets in this video. Been getting a lot of questions around that specific topic, so we'll dive into that in just a minute. Just as a summary, I live entirely out of my brokerage account. My W-2 income flows into the E-Trade brokerage account. I pay bills with my E-Trade debit card or automatic withdrawals. But just to clarify, my W-2 income comes in. I'm buying additional assets, stocks, covered call ETFs, assets that will grow in value and pay a distribution or a dividend. And we'll touch on a few of those today. So eventually, as my dividends grow, it will snowball and cover my living expenses. And so, my plan is to retire in 5 to 10 years, God willing, and we'll look at that in more detail now. So, just looking at the brokerage, I'm going to jump to some of my dividend-paying assets. We have CLM and CRF here. These are cornerstone funds. These are close-end funds. They will pay you the dividend and they drip it at the NAV at certain brokerages, which means net asset value. I'll talk about that in future videos, but I'm scaling back into that position as the rights offering's coming to an end here before too long. I have QQQI here, which is a NEOS fund. It's a covered call ETF on the NASDAQ, or QQQ. This fund has good growth potential, which you'll see on paper there. I'm up 6%, almost 7% there, and it pays a dividend. SPYI is the same company, and that's on the S&P 500. They also are a covered call strategy on that underlying. What I want to spend time talking about, because it's a really good example that comes up in the comments, you might see from time to time somebody talking about how risky this can be, or why are you buying these specific stocks? You're losing money. And so MSTY is basically a yield max stock that sells covered call ETF strategies on MSTR. That's MicroStrategy. So I just pulled up Google here so you can see what MicroStrategy does. But in summary, they're very much aligned with Bitcoin movement. They own a lot of Bitcoin on their balance sheet. So when Bitcoin goes up, this stock will increase. When Bitcoin comes down, obviously it will decrease. So it's very much a Bitcoin play. If you want to research more about MSTY, the covered call yield max version of this, I have the website here. It'll tell you about the distribution rate. You can see their distribution, and you can research it more there if you would like. But I want to talk about this just step by step. So MSTY, again, covered call ETF from YieldMax. They provide the strategy, and then they pay you a distribution. So if you look at this on paper, you'd go, well, why are you staying invested in this? You're losing money. You're down almost $1,400 or 18%. Well, what this doesn't calculate back in is dividends. So if you go up in E-Trade, and I'm just showing this for transparency sake, you go to transactions up here, and you'll see all of my inflows and outflows. Again, you'll see some of these tagged as debit card purchases, certain things I'm doing within the brokerage. I saw my wife here bought flowers coming up for Mother's Day for my mom, and so she does a really good job of staying on top of those things and keeping me in line. And happy early Mother's Day to you mothers out there, and guys, don't forget that. But if you filter by dividends and you go to custom here, and I'll go back to May because I started buying this early, or I guess mid last year, and you hit apply. And then if you go to the filters tab and you type in MSTY there and apply that, you'll see all the distributions that MSTY has paid me over the last several months. I've gone ahead and put this just down on a Word document to make it easy to explain. So MSTY dividends I've received are $5,022 there. MSTY paper loss that you see on my brokerage is essentially, and I should do this, negative 1393. If you do the math there, it's a net profit of $3,629, and that doesn't even account for the next dividend scheduled tomorrow, 5/9. Or I guess I should say that today, because I'm recording this early in the morning, $630. So you can see it's a healthy position to be in. It is generating cash flow, and that cash flow is coming from the covered call ETF element that Yield Max is doing. And you can do that on your own, but they do that, and they pay you the distribution. And I'll talk about covered call strategies in just a minute. I put my email here. Just have had a lot of folks reaching out in the comments section of the videos. I'm responding to those as quickly as I can. I also have folks reaching out to me via email. Please feel free to reach out to me. I'm happy to help, and we're all in the same boat, fighting the same battle and inflation and cost of living, and humbled and thankful for your support. Going back to the brokerage here, I want to touch on, what is a covered call, just briefly. I'll touch on this in detail in future videos. But again, I've been investing for a long, long time. You can see my oldest children's names here, Emma and Gavin. They were born back in 2008. So I really started investing back then, and have just learned a lot over the years, and I'm hopeful to share some knowledge here with you. So when we talk about covered calls, what are we talking about? Well, I'm just going to use McDonald's as an example here. I own 124 shares, let's call it, of McDonald's. One option is the equivalent to 100 shares. So I can sell one covered call on the market, which you'll see down here below. Right here, I basically sold one option for a September 19th date at a 345 call. I was paid $7.71. And so basically you would take that 771 and multiply it by 100, because again, one option is the equivalent to 100 shares of the underlying asset. It shows as a negative number. Don't let that throw you off. Again, you have to understand what you're investing in. You have to understand the way it works, so you're not deceived or misled. And there's a lot of bad information out there, and folks that don't completely understand just what they're investing in. And it's so crucial to understand what you're doing and why you're doing it. So this negative number doesn't mean I'm losing money. McDonald's was down today, so this covered call ETF actually made money for me. I could have closed this at a profit of $332.95 and just done it again. And so when McDonald's goes up, I would sell another covered call on it, and I would rent out my stock essentially. And as the stock ebbs and flows, I would either roll that position to a different date if I wanted to keep the asset and not sell it, or I would close it to collect the premium and keep those funds. And so essentially what that does is it caps my upside potential. If the stock went up above 345, I'd have to hand over those shares, but I would get to keep the premium, and I would get to keep essentially the upside potential to 345. And you can see you always want to sell a covered call above your cost basis, right? So I've been buying these assets in McDonald's for a long time. My cost basis is 209. It's obviously up to 313, and I've sold a covered call at 345. So my total gain would continue to increase up to 345. I would have that $717 premium roughly that I showed below, and I would essentially have to hand over my assets if it broke above 345, or I would roll that covered call to a different date. I would go maybe out to October, November, December, whatever the case might be, if I wanted to keep my McDonald's shares. And that's essentially how it works. So we'll touch on more topics soon. We'll touch on additional dividend assets. We'll touch on selling cash secured puts, which you'll see down here. Won't touch on that now, but feel free to reach out. Thank you so much for your support. I was humbled and overwhelmed at the comments and just the views. And so continue to like and subscribe, please, and feel free to reach out. I'm happy to help. Hope you have a great day. Talk to you guys soon. Bye.